Thank you for joining us. I am Drew Armstrong, the executive editor of Endpoints News, and welcome to Post Talk Live. Hey, good afternoon, everybody. It is Friday, April 10. It is 65 degrees here in the New York City area. I'm going to go outside and take a walk after the show. But first, we are going to be Thank you for joining us. I am Drew Armstrong, the executive editor of Endpoints News, and welcome to Post Talk Live. All right. Sorry about the technical hiccup there. Good Friday afternoon to everybody. I am Drew Armstrong. I'm the executive editor of Endpoints News. It's 65 degrees here in New York City. It's beautiful. After the show, I'm going to go take a walk outside. But first, we are going to talk about the biggest news story of the last couple of weeks, which is deals in biopharma. I have our biotech correspondent, Kyle Lahusik, with us. He's our main reporter covering public and private deal making. And Kyle, I feel like being a deals reporter means that sometimes you are sitting around wondering where the action is. And then other times you are waking up with your heart pounding, and I presume, like slamming espresso shots and cranking out stories. So like what have the last couple of weeks been like for you? I get to edit you, but I get the easy job.
I wish pharma companies plan their announcements around my sleep schedule, but that's wishful thinking. But yeah, no, I mean, going into JPM, everyone was, excited because there were so many deals in the fourth quarter, and then nothing really happened during JPM week in terms of deal activities. So then everyone was a little nervous about the next few months, and then past few weeks, I wake up every morning. It seems like there's two or three deals being announced.
Do you like the rush? Because I always liked the action. That was
Oh yeah,
my,
I'm a runner. Yeah, if there's no action, then what's the point of this job, right?
Well, we are going to talk about all of the action that has been going on. Let's get into the show. Today, we're going to be joined by Emily Field. She's the head of US biopharmaceuticals equity research at Barclays. She has just moved back to the US from London, where she was covering European drug makers. We're going to talk with her about what is driving the surge in M&A right now, where it goes from here, and what it tells us about the moment big pharma is in. Now, if you are joining us for the first time, hello. Post Talk Live brings you the reporting, the analysis, and the debate that usually happens behind the scenes in our newsroom. We put it live to you on screen. If you're joining us on YouTube and you're not already following us, go down, click that little subscribe button at the bottom there. You'll get alerts about future shows. You can also sign up for the Post Talk email on your Endpoints News subscription page. Tiny little bit of housekeeping note. Emily has to share some disclosures since Barclays has relationships or may hold positions in some of the companies, and we may end up talking about those companies today. You can see that disclosure slide and information in the comments on our social field as well as on YouTube. So if you're joining us on YouTube, you can also join the live chat by typing in a question for us or from Emily. We'll do our very best to get to us. And if you miss us live, recordings will live on YouTube and Spotify. Emily, welcome to the show. Thank you so much for being with us. Will you tell us just like about your job? Why are we talking to you? Welcome to the show, and tell us a little bit about your coverage area and everything that is in your universe right now in your new role.
Yeah, thanks. So yeah, and my new role is kind of similar to my last one in that, I'm covering the big guys. So I am covering the companies with the, I guess, war chests, if you will, that, sort of M&A, in addition with the organic pipelines from the companies is really the lifebloods to keep a lot of these companies going. And it's something like you wouldn't even realize, like Keytruda that came to Merck from the Shearing Plow acquisition, what 2010, I believe it was. So, M&A is really crucial to these companies. And this whole, SMID biotech ecosystem, that's something I'm, was watching from afar in my previous job, but now sitting in the US, getting a lot more in the hot seat and kind of just realizing how symbiotic everything is between the large and small companies.
Okay, so we have been, I think eh, I joined Endpoints maybe 3.5 years ago. we were kind of in the post-pandemic slump, and we've seen these false starts before where there'll be a couple deals and everybody gets very excited. And then all of a sudden over the last few months, I mean, we've had, these 5 and $10 billion deals kind of like bang, bang, bang. Every single week we wake up and we get another one of these. Arcellx. We had Servier day one. We had the deal recently for Centessa. It feels like there has been a cadence of this stuff. Why is this happening now? Why, at long last in the spring of 2026, are we starting to see pharma companies move? Because it feels like people have been saying like that this is coming forever, and we've all been sitting around waiting.
Yeah, and that's a great question because it sort of felt like, bringing up the Shearing Plow acquisition was also when Pfizer bought Wyeth. Maybe that like 2010 to right up until the pandemic. Maybe you could call it like the mega deal period because there was also, I guess, kind of probably the last mega deal to go out was Bristol Celgene, and then the pandemic happened, and that kind of just put, I guess, a hold on everything coming out of the pandemic. I think everybody was sort of trying to find their footing, and these large cap companies were obviously not deploying capital on M&A. So these sort of war chests kept growing and growing. And, we've been trying to figure that out ourselves. And it felt like there was always perhaps some sort of policy uncertainty, particularly coming out of the pandemic. Under the Biden administration, first it was Build Back Better, and then IRA, and then Trump won the election. And then certainly last year was sort of the uncertainty created by the tariffs, created by MFN. And then going into the end of this year, or I mean, the end of last year, all the big guys signed their agreements with the administration. And to Kyle's point, I think given some of the reporting in the press, I think we were all expecting really big JP Morgan, and that kind of fell flat. So yeah, we're sort of like, well, wait a minute, why isn't this happening? And all of a sudden now it's happening now, but it's certain it why it didn't happen in January. It's happening this spring. I don't have a great answer, but a lot of these companies just, I mean, even Merck, which has just on the Turns acquisition. I mean, from our perspective, like they could do 5 more of those with at least perhaps with the savings that they've had in terms of just this cash pile.
Yeah, Kyle, I mean, you've been on a lot of these calls. What are people saying about kind of their firepower that they have to do this type of stuff? I know you talk to a lot of folks as well on the venture capital side and the on the startup side. I mean, does it feel like one, I mean, what are companies, what are these buyers saying about their firepower? And then two, when you're talking to investors, I mean, the people who are doing the selling here, what are they saying about this moment?
Yeah, well, to Emily's point about, Merck being able to do 5 more of these turn-sized deals, I feel like every single time Merck does a deal, Rob Davis is always saying, "We still can do up to $15 billion in deals even after all of these are happening." So I think that just goes to show how much firepower they have. And I think it was, a Stifel report earlier this week saying that pharmas have more firepower than ever. So back to Emily's point about, sitting on such large war chests. Um, and sellers, all these venture-backed biotechs, there's a little bit of an opening of the IPO market, but they still see M&A as the main route for their exits right now.
Emily, where does that firepower come from? Because I mean, I think, we look at the environment we're in. I know we've seen some cost cutting. I'm sure people still have some COVID cash lying around, but we're in a really high interest rate environment right now. Like there's lots and lots of risk around the world. I mean, the headlines are very, very scary. But like, so where is the cash firepower that larger buyers have? Where is that coming from right now? Or is the type of deal size that we're looking at just not punitive kind of in comparison to the market caps of these companies?
Yeah, I think that latter point that you made is super relevant because in my prior European coverage, that was something that the management teams, I picked those companies up right in the middle of COVID in August 2020, and that was just sort of the drumbeat of Vaz from Novartis, all these companies was bolt-ons, bolt-ons, bolt-ons. Nothing transformative, nothing major, and maybe that's just because of somehow some of these mega deals went. I think they were really out of favor with investors, and so with so many of these buyers targeting these sort of 5 to 10, I know Merck kind of said 15, below 15 is their sweet spot, but even sort of in some of these ranges that these companies put out, 15 even feels big. So yeah, these all feel like digestible, such that yeah, if one of these guys buys a $2 billion company and the asset fails like a couple years down the road, the management team doesn't really get a huge strike against it for that.
Got it. Okay. And yeah, I did want to ask you about this because this is kind of a topic that I have talked with a lot of people. What counts as a big deal now? Because I've been doing this long enough that I remember back in the day, like Pfizer, AstraZeneca, and Bristol Myers Celgene, and it really feels like that type of transaction. You just don't even hear hints of anyone think about that. Have we had to redefine what a big deal looks like, and why is that?
Yeah, I think that's a great point. And part of it might be just because there has been so much consolidation that now there's these larger cap companies, and even some of the maybe more mid caps such as like a Regeneron or a Vertex have kind of moved up that market cap ladder, if you will, such that there's kind of these big guys, and then there's this huge gap where there's not as many middle of the road companies, and these mega mergers are just so out of favor that it feels like a lot of this universe is sort of this 15 and below. And even with Revolution Medicines, which, there's a lot of reporting across the financial press that was being sought after by potentially Merck, potentially AbbVie. And some of those numbers were getting up into the 20-30 billion dollar range. And I think one of the things that people were saying is like, whoa, this feels really, really big now, where that certainly
Mhm.
wouldn't have been the case a few years ago. And actually, one thing that popped into my head in terms of maybe another thing contributing to now that the change in the M&A environment is certainly the regulatory shift at like FTC. And because we did see FTC try to block the Amgen Horizon deal
Right.
unsuccessfully, but I think that there was certainly that the sort of threat of litigation was a little bit of a deterrence, which it feels like, at least from an antitrust perspective, it's a lot more accommodative of an environment right now.
Hmm. I'm curious for even for smaller deals, the due diligence process still takes up a lot of energy and time. Do you see that, changing how BD teams operate going forward or the way executive teams approach M&A?
Yeah, I don't think so. Just because as we're seeing some of the filings come out as some of these deals, and even just speaking about Biogen Apellis, right? And I think that was one where there was a really big premium and relative to where Apellis stock price was, and speaking to Biogen, they're like, yeah, I mean, Apellis' stock price is going to do what it's going to do, but we've been looking at this for a long time, and our value really hadn't changed. And and then on the other hand, you have this Merck turns deal where right away people were like, well, this premium is not high enough. This premium is not high enough. And then the documentation came out this week that actually there were some previous higher bids, but there were some data updates such that those bids came down. So I think that at least now turns happened relatively quickly just because their data was at ASH, and now we have a deal now. But that's probably more of a de-risk deal given the mechanism of action. Just need to run a phase 3 trial. But long story short, I think to your point that it doesn't seem like these diligence processes have been, cut down at all. I think, yeah, I think these large guys, even though they're doing smaller deals, are still very, very deliberate and doing their homework on them.
Yeah, what's your take when you're reading kind of the disclosure files, and seeing, hey, okay, we've got multiple buyers. I think it's always, I always treat it as a good sign when we see, party A, party B, party C, party
Yeah.
D. It tells you there's buyers out there in the market. What have you been reading into the, in the disclosures that you've been seeing, post these deals that have been announced?
Yeah, I mean, there's always that game of, oh, who's party A, who's party B, who's party C. But I think that one thing that also kind of, I guess, is a little bit unique about, at least thinking of my current coverage universe in the U.S. companies right now. Merck obviously has been building up their war chest for some time. On the other hand, companies that had done big deals like an Amgen, they haven't done a single thing since Horizon.
Yeah.
But now they've delevered. That's been integrated, so they're kind of back in the game. Bristol now is kind of back in the game. Kind of the only company, at least on the US large cap side, that's a little bit limited is Pfizer. They've stated that they only have 7 billion of capacity, and that's largely because they deployed 40 billion on CGen and then just did Metsera last year. So, but
Mhm.
but other than that, it feels like almost any large company really could be interested in any of these assets that are going up.
Can we talk about the valuation question? And Kyle, you should jump in here as well, because I have a, it felt like there was a period of time when we were kind of pre-recovery, where one of the things that you heard anytime you talked about with people about M&A with people was like everybody was looking at their stock price 12 months ago and saying, "Hey, why would we sell now? It used to be, and there was a lot of hesitancy, it seemed like, to, around the ability to come to an agreement on what value should be. And it felt like that was driving, and maybe buyers were waiting because they were saying, well, this thing's been going down for 12 months. It's probably going to go down for another 3 months. How much of what's happening now, where we're seeing stock prices rise and valuations rise, I mean, is there a FOMO component here where, like, if you don't act now, the thing could be worth 20% more and you're going to be having a tougher negotiation and paying another $1 billion or two? I mean, is FOMO a factor here?
Well, I remember I talked to the Biogen CFO the day of their Apellis deal, and I was asking about that, and she said it's kind of counterintuitive. You would have thought there would have been a lot more deals last year, early mid last year when stocks were down. Buyers maybe, or sorry, sellers maybe be more willing to sell because they're worried about their future. But in fact, being toward the bottom, they wanted to wait it out and see if they could get to a higher valuation eventually. So.
Emily, what do management teams say about this when you're talking to them? I mean, how are they kind of talking about the valuation question within the context of this stuff?
Um, yeah, that's a good question. I mean, I think that we haven't heard to the same degree because I'm just thinking back to like a few years ago when at some of these larger management days or just sort of investor days, like like Novartis does a Meet the Manager every year, Roche does their Pharma Day every year, and not necessarily trying to say pin this on either one of those companies, but it seemed like a lot of the larger companies, maybe a few years ago, were saying that there was this big disconnect in between what the large cap companies thought
Mhm.
valuation was and what a lot of these sellers potentially wanted. And I don't have too like a lot of these CEOs are very reticent to give specifics, but I don't think at least I'm not hearing that as much. It's and maybe to the point that you guys were making in terms of sell versus IPO, it really seems that kind of there is more of a willingness to meet in the middle than maybe there was a few years ago.
I feel like we can't go any post hoc live nowadays without talking about China. So I wanted to ask, on the deal making front, we've seen a few biotechs, with China assets get bought this year. Wrapped, oral medicines, Day One has a few China partnerships. Turn started out as a US and China biotech in the metabolic space before they evolved into an oncology biotech. Do you see more deals like this happening? Do you see appetite for Chinese derived biotechs?
I think so for sure. Because at the same time we're sort of reading all this stuff about the Chinese domestic biotech ecosystem, and how they've changed some of their procedures, like allowing INDs and sort of clinical trials to just really get started faster. And the large companies globally are really in the best position to take advantage of that because they already have a lot of business on the ground in China. They have a lot of relationships with regulatory authorities, such that it might not be a wholesale acquisition, but they can make these partnerships such that they can facilitate the entry of these drugs into a place like the U.S. market. And
Mm.
yeah, and so many of these companies, when they talk about China, they talk about it very, very positively in terms of just that domestic biotech ecosystems. I think we'll hear a lot more of that for sure.
I wanted to ask you, it's always interesting to kind of watch patterns in, the types of companies that are getting bought, from, how late they are on they, they have products on the market. Do you have a read right now on the industry's appetite for risk as it relates to, the type of things that they're buying, or, whether we see, we're starting to see more takeover versus licensing, or, things like that? Like, how do you read the industry's appetite for risk within the context of what they need to do, in time to solve their patent cliff problem? Do you see patterns there? Does it feel like everybody's in their own unique situation here? What does it tell us?
Yeah, that's a great question, and I do think it is pretty bifurcated, kind of based on where these companies are, relative to their IP cycle, like Merck. A lot of the deals, I guess I'm thinking of Acceleron, Prometheus, now Turns, kind of assets that were essentially kind of more phase 3 ready,
Mhm.
if you will, or further down that risk curve because Merck with the December 2028 U.S. LOE for Keytruda, kind of they need to have growth a little bit sooner than someone like a Lilly, right? Even Centessa obviously is a further along asset, but um, most of the deals that they've done are much more sort of that earlier stage, more kind of development type of deal. So I think Centessa was, from a Lilly perspective, it wasn't. It wasn't even maybe the highest profile deal of that day, but it was a little bit different for Lilly to, I guess, maybe do a deal that for advance. And like Biogen, for example, like they had been very, very consistent about what they wanted, and they wanted an asset that was commercial, and Apellis plays into their emerging pipeline in nephrology. So
Yeah.
yeah,
Well,
and then, so yeah, a little bit of a cop out answer, but yeah, it depends.
no, I mean, we should talk about Lilly though, because I think that's a fascinating situation because they, for as much money as they have, like for all of the equity and cash firepower that they are sitting on, they really, until Centessa, and I don't even want to count Centessa as, big. I mean, it had not been
Yeah,
doing those type of really large things. And it's interesting to hear them talk about their strategy. I mean, I've known this company for a long time. Obviously, like they have been they know what the very bottom of a patent cliff looks like. And so it's
yeah.
super interesting to kind of watch them lay out a deal making kind of future pipeline strategy right now that feels like spreading a lot of bets in, in a few areas and just doing tons and tons of partnership work and things like that and really investing it early and investing in technology. How do you, I mean, I know that's my read on what they're doing, but like how do you read what they're up to within the context of, I think the ability that they would have to go out and, do quite a bit more than it seems like they're doing. How does that how do you read kind of their BD strategy within their larger strategy?
Yeah, that's a great question. And I was actually kind of, just as I was getting to know the company a little bit better, kind of reading about a lot of these technology efforts that they've set up, like this Tune Lab that they announced last year, which is really kind of a sharing of their learning models with smaller biotechs. It's almost like that. Then they could, so the biotech maybe accelerate these really early stage, could accelerate what they're doing, and then maybe Lilly could hop in, kind of potentially. I don't know if I'm describing this totally as it works, but that it certainly sounds like, building this platform for the future. And even with Centessa, I think on its surface it looks like, oh, okay, they're buying this potentially differentiated asset in narcolepsy. And I haven't had a ton of time to read into this, but I've been reading, amongst sort of the industry press, that actually this, and maybe this is why they're doing it, this node that this orexin mechanism of action could actually maybe be like a GLP-1, and that could have potentially much, much broader applicability. And if that's why they're doing it, then that would seem very much like a Lilly type of deal, as opposed to, oh, like, it
Mm,
have this asset in narcolepsy and compete with Jazz, etc.
Right. Yeah.
mm. I To your point about the broader applicability and Biogen, getting into an emerging area of nephrology with Apellis, I'm curious, we've seen, most of the big pharmas over the past few years really fine-tune, prioritize their pipelines to very specific areas. Do you see any of this deal making happening in free areas or areas that are kind of new for them? Because if so, do you think that's more of a healthy state, I guess, going forward, a sign of growth?
I I I think the one area where maybe there is going to be a little bit of flex is this, cardio metabolic space, because I think, we did see this gold rush for obesity assets, but now with Metsera going, I know that there's some other smaller publicly traded biotech companies out there, but you're really not seeing as many of the large guys talk obesity is a high priority for M&A, because it feels like people that wanted to be in have done their
Mhm.
deals, and we'll see how those pan out. But this sort of, I feel like this emergence of obesity falling under cardiology, and maybe that also including hepatology, and this whole like interconnected space of cardiovascular obesity, diabetes, etc. That it feels like that's kind of where maybe you might see some entry into from newer players. This is kind of a new therapeutic area, just because that's becoming broader, and just and especially like this last ACC, just within cardiology, it felt like that was okay, like a primary careized, oral genericized space for so long, and now it between like LP little a and all this other stuff emerging, that and the interplay with GLP-1s, that cardiology is now like this huge space that we weren't really even talking much about 5 years ago.
So talking about focus and talking about Lilly, I feel like I'm, something that we have been talking a lot about here and trying to figure out is, you know, it used to be that pharma companies would have these big conglomerate businesses. You had animal health, you had consumer. I think Kyle, you might have pointed out to me at some point that Bristol Myers actually used to own a movie studio.
Yeah, in the
They owned
early
Palomar
80s.
Pictures. They did the Stepford Wives and Pelham 1, 2, 3. I mean, like they got rid of that. I think it was after about 2 years. I'm on their website right now, and I have to ask them about it that at some time. Um, but I do look at that, and I look at some of these telehealth deals that we're
Mhm.
seeing companies strike. I mean, where telehealth is becoming like an increasing component and pipeline for Lilly, and everybody's doing the partnership model right now. But Emily, could you see a world in this, where like online retail has become a huge thing, and like owning that channel feels like I'm waiting for the out there deal that happens where somebody goes out and says, "Hey, Hims or Row or whoever sure is making a lot of money on mostly just selling our products and a bunch of stuff in our suite." I know there's probably some, regulatory issues around something like that, but I think it's fascinating what we see right now with, the sales channel partnerships that are happening around specific really big products. Do you see a world in which someone does something really out there and interesting one day?
Yeah, that's a great question, because I thought that was so interesting, that announcement that Lilly had about this new Employer Connect initiative, which almost feels like it's kind of going outside of the traditional PBM model, not necessarily being like a full telehealth provider, because they're using mostly third party people, but giving cost transparency on obesity medicines to employers who otherwise don't want to cover them, because they get this bundled rate from the PBM, and it don't know if it's all the members taking Zepbound, if that's what's driving it up. So um, it's certainly this like consumerization of a lot of healthcare feels like it's going to continue. However, I think where there, at least to me, there feels like the biggest uncertainty is it will probably be regulatory driven, in like what does PBM reform happen? Kind of like in the last few weeks, it feels like that is picking up. We've had some feedback that like sort of Cigna, as I guess talked about it with some
Mhm,
investors.
mhm.
From a political perspective, it is bipartisan, but what kind of drives that? Given the PBMs are now obviously part of these big managed care organizations, so I feel like for that to happen in a broader way, it probably would need to take some sort of shift in the regulatory environment.
Yeah.
But
Something to think about.
like,
Yeah,
yeah, this I mean, the shift to transparency, right? It'll be super
yeah.
interesting to see if if this Employer Connect results in a lot more people picking up Zepbound, then maybe that could just drive some of this more like not dissolving, but sort of disassociating with the traditional PBM model.
Yeah. Um, I want to ask you. We got a question from the chat, and that you touched on this a little bit earlier. Kind of some of the uncertainty issue that we're having here. Um, do you have any, as you're talking to clients, as you're talking to companies, how much concern is there about the FDA right now, where maybe if you're getting into a newer technology or a newer therapeutic approach that, you might be rolling the dice with this regulator a little bit. I mean, do you hear, or do you get questions about a degree of conservatism there, whether it be in gene therapy or cell therapy or something like that?
Yeah, absolutely. I think sort of kind of this whipsaw of personnel changes at FDA. Now it hasn't necessarily been moving, driving the stocks of the big guys, but for my colleagues that cover, the rare disease space, like I don't know, like biotech investing is not for the faint of heart,
No.
right? But I mean, and this is just my speculation of, we'll kind of see what happens with CBER and change at FDA, but like I was kind of wondering maybe if this could perhaps spur some of these companies to sell to a larger company that, in the way this administration seems to work, like, these large relationships seem to have, our large companies seem to have
Yeah.
like personal relationships with the administration. So does that insulate perhaps, one product cell therapy company from some of that regulatory risk, and maybe they'd be more willing to sell when they wouldn't have, a couple of years ago. We'll have to see, but yeah, but to answer your question, I do think sort of that tone from some, seeing what the Pfizer CEO has kind of said more publicly. I feel like you're definitely starting to see a shift in the way some of these CEOs talk about FDA. Where kind of last year it was like everything's fine, like don't worry about it,
Yeah.
everything's fine,
Right.
and now they're,
Well, it
I
wasn't
think,
fine.
going
Yeah.
out that curve a little more. Yeah.
Maybe we can end on a fun question here. What is the deal you've always wanted to happen, or the dream deal you'd love to write about?
Oh, wow. Oh, God. Well, I really have to be really careful about what I say here. Gosh.
This sounds like a
Well,
this sounds like a good answer. Yeah.
Or
oh,
type of
man.
combination, maybe not specific names, but type of combination you'd like to see.
That's a really good question. Oh, man. I'm drawing a little bit of a blank because, and I should have a better answer to this given that my first job was risk arbitrage. So that's why I love M&A and I love deals. I did risk arbitrage on the buy side like 20 years ago. I like kind of just thinking on the spot, like I think probably the most interesting thing would be like, going back to Drew's question, maybe not like a telehealth deal, but like if one of these companies really making a move into obesity were to kind of do a deal kind of more on like a consumer type of, but now I don't know if that means like something in food or something in aesthetics,
Mm.
because we've kind of seen these like
Feels like all the
loose
lines are
links of,
starting to blur. Yeah, I mean, and
yeah,
and this
just because
this
like,
HHS
and
is
because
blurring them further.
you've seen this boom and bust, because I've
Yeah.
been close to my consumer colleagues, Barclays on both sides of the Atlantic, and it's like some months like all the food and personal health companies, like, everyone's freaked out that GLP-1s are ruining everything, and then they kind of get over it and move on. But like yeah, I think like an outside the box, like I think it would just be such a shift in thinking about healthcare,
Yeah.
if a company on obesity bought like, a consumer health company, even though they've all kind of split up. It's something like that, maybe.
Well, I mean, you bring up a really good point because it does feel like right now that there's a lot of shifting ideas around like what is a drug and who gets to sell it.
Mm.
And I think that almost certainly has the potential to somehow disintermediate some of these really sharp definitions of a pharma company and a food company and a wellness company over the next few years.
Yeah, and even to your point, like, because I've been in the UK for 8 years, where not having to deal with U.S. health insurance, and I think at my job before I moved, I had some sort of HSA, but now coming back, I mean, it took me 2 hours on a Sunday to figure out like what plan of two to sign up for, just because I wasn't used to it. But now it's like use your HSA to pay for like everything. So like, yeah, this whole like consumerization of healthcare. Yeah, and like, or yeah, maybe one of these companies buys like a fitness, I don't know,
Yeah.
but yeah, like, yeah, and yeah, wellness, health, what's pharma, what's healthcare, yeah, the with the consumer vertical of how the GLP-1s are going, it feels like it's kind of blurred a lot of those boundaries.
Well, when the weird deal happens, we will give you a call to talk about it. I can't wait. I know Kyle is excited
Yeah.
and it'll be a lot of fun for all of us. Emily Field, thank you so much for being on the show. Kyle Lahusik, always a pleasure to have you on. I am Drew Armstrong, executive editor of Endpoints News, and your host here on Post Talk Live. Unfortunately, that is all the time we have for today. Thank you for joining us. We will be following all of this closely. Plenty to write about, plenty to track, plenty to send you all headlines on. You can keep up with our coverage at endpoints.news and by subscribing to our newsletters. The recording of this conversation will live on YouTube. The audio will be up on Spotify, Apple Podcasts in a little bit. Make sure you sign up for our newsletters. A huge thank you to our producer, Nicole Wetzman, and our engineer, Julia Harris. We will see you the next time news breaks.